What is going on, everybody? Welcome to TrendSpider Live. My name is Mike, and today we're going to be watching some earnings reports, specifically from AVGO, ticker AVGO. But this is going to be Broadcom. It's a pretty big mover in the NASDAQ index, the QQQ. It is actually, to my surprise, I didn't realize this until today. It's the sixth highest allocation, I believe the sixth highest allocation in the QQQ. So this report is pretty significant for the overall market. So decided to go live for it. If you guys are out there in the chat, say what's up. Let me know who is out there, and let me know what you guys are watching, or if you have a trade in AVGO going into earnings. But first thing I wanted to do is just take a look at what's going on first with our Mentor Q indicator, our gamma levels indicator, because with this you can actually see call resistance, put supports right on your chart. And also, which is really important for earnings, is the 1 day minimum and 1 day maximum. So Joe or Jas, looks like you got some calls, 330s, 345s, 370s. Okay, yeah, I mean, that's actually pretty far out of the money, it looks like. If you see the 1 day max right there, it's sitting at like 314. Let me see if this is this is the end of day. So this is calculated based on yesterday's close. We change it to intraday. Let's see what it looks like. So intraday, it's pretty much the same right there at 316. So 316 is the expected move to the upside, and we actually already hit the expected move to the downside. If you see this put support 0 DTE down here at the bottom, right around 290, you can see that. So interesting stuff. Let me see. Also, if you guys didn't or don't know about the Mentor Q indicator, let me drop a link in the chat for you guys for the Mentor Q indicators. We actually just were live with the CEO of Mentor Q. Yo, what's up, Dan? What's up, Dan? Always great to see the CEO of TrendSpider in the chat. But I did just drop the link for the Mentor Q indicators, which are the levels indicators right here on my chart. If you guys want to check them out. And you can also check out the live that we had. I think it was just yesterday with the CEO. They just went live on crypto as well as stocks, Forex, futures, and all that. So yeah, definitely a nice indicator. You can see the expected moves. Let's take a look at Lulu, because they have earnings too. Looks like they're moving up into close. They're moving up pretty good. The 1 day, expected move for them is around 209. Same with the call resistance, like that 209, 210. Basically, what that means, guys, is that if you're buying calls going into earnings, you need pretty much the stock to break above that 1 day max, which is basically the expected move. Because if it doesn't, then theta decay is just going to hit your options and not be a good time. Yeah, glad to see you were there live. It is genuinely one of my favorite indicators. It's pretty awesome. I love it. But real quick, let's pull up Sidekick and ask it about AVGO earnings. Let's pull that back up. I just have this quick prompt right here. Let me make sure there's no system prompt in here. Nope. The prompts I have right here is just AVGO is about to report earnings. Give me a breakdown of what traders should watch fundamentally and on chart wise going into the report. Also make some tables comparing AVGO's valuation metrics to its top competitors. So we'll see what Sidekick has to say about AVGO earnings, and then we'll see a nice little comparison to its competitors. Another thing to bring to attention is seasonality, which I have down here. Let me minimize that for a second. As you can see, September is pretty bad seasonality wise, and so is October for AVGO. Worse is April, but yeah, as you can see, it's over the last 16 years, only 41 to 50% of September and October's were positive for this stock. So that's something to keep in mind. Let's take a look at that compared to SMH, which is the semiconductor ETF. Yeah. For 25 years on semiconductors, September is historically the worst month for semiconductors. Very interesting there. Not sure why exactly. But yeah, semiconductors just do not like September and October, but then in November, they tend to do well. So we just started September, obviously, and October's next. So we'll see how semiconductors perform. It's also good to watch out for competitors and how they move, such as like AMD. Let me remove this here. Turn off these Mentor Q levels for a second. So we can see AMD on the weekly chart is doing pretty well. Let's check out AVGO on the weekly chart. AVGO is doing insanely well. And by the way, Pelosi has been buying Broadcom. She's bought it a couple times. You can see it with the Nancy Pelosi trade tracker indicator that we have. It's very nice. It basically just plots Nancy Pelosi's trades around your chart. I dropped a link for that in the chat below for you guys to check out. So that is interesting. She bought, let's go pull up our what's happening now. Congress trading, and then I have it set to, yeah, Nancy Pelosi is the Pelosi trade tracker. So on July 9th, was about a couple months ago, Pelosi did buy AVGO. When she leaves it, it should say if or when she sold. It does not say she sold. She did sell some Apple and Nvidia back in January. Usually, it doesn't say if she bought options or calls, but I will say Pelosi does usually buy long-term call options, but it just gives us a value. She put anywhere from about 1 to 5 million into AVGO. She bought it on June 20th, but reported it a few weeks later on July 9th. But you can see it plotted right here on the chart. She has done pretty well with this stock as it almost is hitting all-time highs, as you can see right here. Let's take a look at what Sidekick has to say. Obviously, reports today. Expected EPS, $1.54. Expected revenue is $15.8 billion. We have the reports tab right up here as well. I can pull up right now. TrendSpider does not have trials running right now. Sometimes we do offer paid trials, but I can drop you the link to check it out in the chat. But yes, definitely check it out. Actually, let me see. We just ended a sale, unfortunately. Give me 1 second here. You can get a trial. You can get a paid trial, but not a free trial. You can try it out for as low as $19 right now. So you get a $19 trial using that link down below and try out everything you're seeing here for 2 weeks for just $19, which is pretty good, especially considering the Sidekick AI. It is pretty expensive to run this on our end, and you get some free messages that you can use. I mean, look at how beautiful this is. Let me continue reading here. Again, the expected revenue, $15.8 billion, like I was saying. 43. So let's see what it says. Let's actually look at the competitive evaluation analysis, because I want to see how it's priced compared to other stocks, specifically its competitors. So it pulled automatically without me. I just said competitors. It pulled NVIDIA, AMD, and QCOM, which is about right. Pull up the 15-minute chart. We have market closing here in 7 minutes, by the way, everybody. But yeah, let's take a look. So we have AVGO here on the left column. PE ratio is at 89. Pretty high. Still lower than AMD. QCOM is only one with the lower price to earnings. Price to sales, again, it's kind of in the middle. But the thing I was kind of looking at is its margins. Its net margins are pretty good. NVIDIA is just the king. 56% net margin, but AVGO comes in second, just under QCOM. As you can see, AMDs are quite a bit lower. They also have a pretty solid return on equity. But let's see. Key takeaways is that Broadcom trades at a premium price to earnings versus NVIDIA, as you can see, but lower than AMD. Pretty much exactly what I was just saying. QCOM looks cheapest on most metrics, is what it pointed out. Price to earnings is very low for QCOM. Let's take a look at the QCOM chart real quick. Yeah, QCOM is interesting. It's been not doing as good as these other semiconductor stocks. Chart is pretty choppy, but if you look at, obviously it's not testing like all-time highs like Nvidia has been, and Broadcom. Look at that, looks like Nancy Pelosi. Here's Nancy Pelosi's buys and sells here on Nvidia. Pretty funny. She sold right here on this candle, basically at the top of 2025 is January. And I think she bought again after. Yeah, so she's always kind of buying and selling, mostly buying. Has worked out pretty well for her. Let's go back to AVGO. Pull this back up. Oh, pulled up some unusual options activity. It says heavy call buying for the 300 to 320 strikes in the September expiration. Puts 280 to 300. Of course, ahead of earnings, there's a lot of hedging going on. That is a given. Market closes in 5 minutes, so I'll turn on the after hours movement to get ready. And let's see. Morgan Stanley raised target from 338 to 357. UBS to 345. Maintain on Goldman Sachs. So if I do turn on the analyst estimates indicator, we'll get a closer look. Let me add it back to my chart. Let's see exactly what analysts are saying about AVGO. So this analyst estimates indicator shows the top, the highest and lowest price targets for analysts, and then the median and basically the average, which the average is around 312-ish, which is just right above where we're trading. So yeah, and then the highest price targets at 357, lowest at 254. So we're kind of trading right at the median price target. Analysts are kind of just saying it's, I guess, fairly valued, which kind of makes sense given the PE ratios. And, you know, it's at an 89 PE ratio, but the revenue is growing pretty good. Do some solid net margins. So, you know, overall good company, but yeah, it's still pushing all-time high. So this should be a very, very interesting earnings report, honestly, especially considering that it's so heavily weighted in the NASDAQ 100 index. Gives us a couple technical levels, a breakout target if it breaks that 315 resistance, and then supports here at 290 and 275. So let's take a look at this, the QQQ going to close, and I'm going to turn on the 5-minute. Wow, QQQ is pumping into close. That is pretty nice. That is pretty nice. Let's take a look at the gamma levels on Qs real quick. Yeah, QQQ is actually about to reach the 1-day maximum, and it's actually at this call resistance 0DTE and the gamma wall for 0DTE, which means we're either about to get rejected or probably fly through it, depending. It looks like at the moment we're flying through, but there's not much time until close. So this should be a fun after-hour session from the looks of it. What else are you guys watching out there? Let's take a look. Yeah, SPY pumping. Would tomorrow help? News help and PM. Are you talking about Philip Morris? They're out. I'm gonna wait, pull up AVGO for this earnings movement real quick because I do not want to miss it. We got in about 2 minutes. We could get some pretty nice movement. Let me take off this Mentor Q. Also, if you guys didn't see the hackathon reveal, we just announced a bunch of winners. We have our valuation dashboard up that shows using the Alpha Vantage API key, you know, the PE ratio, forward PE ratio, PEG ratio, all that stuff of any stock you have on your chart. Obviously, right now it's Broadcom. I have a link for this valuation dashboard. It's called. You can just find it in the TrendSpider store. Yeah, it's hard to say. I don't really like to guess what earnings are going to do to a stock. I mean, with Nvidia earnings, like what, last week, it pretty much crushed earnings other than not growing as much as initially thought. And then they came down on crushing earnings. So yeah, it's really, I wouldn't say it's always a coin toss, but like, yeah, it's hard to say what's going to happen with earnings. I mean, if I had to guess, I mean, I would think it would probably try to move up. I don't know. We're pretty close to that all-time highs. If bulls can pull through, they get a good report. Bell just rang here. Let's see what happens. I don't know if we'll get any major movement yet. The actual earnings probably won't drop. It depends. They usually drop them anytime from like 5 minutes after the bell to 15 minutes after the bell. So we'll have to wait and see. But we'll probably get some volatility nonetheless. Let me turn the valuation table off just in case so we can see everything going on. Here's the moment of truth, you guys. Let's put on the 1 minute. We do have after hours enabled. So this is the first 1 minute candle going into earnings here. Open up Sidekick here. Let's do the same prompt. So where you kind of analyzed AVGO, it's looking pretty good. P ratio is relatively high. Still lower than AMD's though. So yeah, it's kind of a toss up. As you can see, the revenue growth is incredible. EPS growth is also incredible. It doesn't match up, or it's not as good, I should say, as NVIDIA's, because NVIDIA is just the king. But, you know, we'll see. You guys saw AEO today. Look at that, up 37%. That's American Eagle. Put out a tweet earlier about that. We put out a X tweet using Sidekick. And yeah, it's basically just because, you know, I forget his earnings today, but it was about the Sydney Sweeney, I don't know, ad that did really well for them, and Trump called it out and all that stuff. What up? What up? Let's see. Yeah. While we wait, we also have Lulu reporting. So I'm going to duplicate this prompt, but ask about Lulu real quick, and I'll pull up that chart here in a second, because that should be a good one too. Let me see if I can steal the multi-symbol view. Leave this here for now. So I don't know, we might get some price movement here. It's 1:02 p.m. Pacific Standard, that is. It's what? It's Eastern. It's 4:02 Eastern time. So we'll see what happens. Nothing crazy yet. Nothing crazy yet at all. Let me pull up. I don't want this to be too big though. We do have a really cool unusual options indicator now called the Flowbot that was submitted to the TrendSpider hackathon that I want to show, but it is quite big and I don't want to miss the price action. So I'll show it here in a little bit. It looks like we just got a weird candle here. We're getting some movement to the upside right now. How big is that? So this was like the close. I mean, we're up 0.23%. That is really nothing so far, but it was something. Getting ready for, let me put some volume on that volume. Volume. See, pretty good volume spike right here at the close, but since then, nothing crazy volume-wise. This is the 1 minute chart, keep in mind, so it's being kind of weird and gappy. Let's see what happens though. Really want to check Lulu, but I do not want to miss the moment that this stock moves. It is 04. Maybe 1 minute we'll get some news. Maybe. Let's see. Check around. Our news tab does not have anything yet. I will re-add it right here at 5 minutes, which is maybe when it'll come out. Then the numbers, that is. Getting a little bit of movement to the upside. Yeah, nothing much going yet. It's really just, it's going to be nothing now, and then here in a few minutes, it's going to be all at once. We're probably going to see a massive candle. While we wait, let's see what Sidekick is saying about Lulu. Yes, it's day after close, of course. Let's see. Revenue target 2.5 billion, showing negative year-to-year change expectations for both revenue and EPS on Lulu. Doesn't surprise me much with tariffs. Strong beat history, though. Last 8 quarters showed positive EPS surprises, averaging 8.4%. That's a cool stat. Gross margin, right around 58 to 59%. It's talking about international growth being the key driver for future expansion. Of course, forward guidance is going to be important. Let's see how it compares. It pulled Nike as its competitor. Makes sense. Pretty similar PE ratio. Price to sales, Lulu is a little bit higher. And it's actually basically almost 3 times smaller than Nike, a little less than that. Better margins than Nike by quite a bit, actually. Better ROE by quite a bit. Looks like there is some analyst downgrade since March, but the average analyst price target on Lulu dropping from 400 to 280. So yeah, Lulu's not looking super hot, which could be good if they end up, having good earnings. Lulu minus 13%. No way. Hold on. I have to pull this up now. Whew. Yeah, there's Lulu. I was just saying, might not be the worst, but if they do have good numbers, but they weren't expected to do very well, it sometimes can be kind of a good thing. In this case, it doesn't look like it was. Let me re-add the news widget here. They issued a lower guidance. Yeah, it looks like Broadcom's probably going to be in 10 minutes, I'm guessing. But Lulu issued a lower guidance, which is, I watch guidance the most when it comes to earnings. Of course, you want to see good beats, but forward guidance, I think, is incredibly important for the stock going forward because the markets are forward looking. Yeah, that's really not good guidance there, from what it looks like from these quick news. But it looks like EPS beat and sales missed by just a tad. Pretty good EPS beat, but that bad forward guidance is probably what kills it. Oh my God, did I miss AVGO? Oh no. Scared me. Someone said AVGO 320 in the chat. And yeah, no, still has not moved. I'm assuming at 4:15 Eastern is probably when the number is going to come out for AVGO. DocuSign also had earnings. DocuSign ripped. Yeah, we're just waiting on AVGO at this point. 10% ripper for DocuSign. They're not in news. Yeah, they clearly probably beat. Yeah, Docu is doing very well. Let's check out the daily chart on DocuSign. Actually hasn't been doing too bad lately. And I mean, on the weekly, obviously they're nowhere near their previous highs, but on the daily, it doesn't look terrible. And it doesn't look insanely good either, but its earnings report was good for him. I don't know if anyone trades that still, but it's like we're getting some type of movement here on AVGO. Probably 5-6 minutes rocks. Probably. Maybe a 3 trillion market cap in a year, and video at 6 trillion next year. That would be insane. Would be insane. Yeah, AVGO is currently trading at 306.78 in after hours movement. Where'd it close? It closed down here around 306.09. So yeah, pretty much flat still. coming down right now a little bit. It's a pretty, actually kind of a sizable 1 minute candle. Nothing crazy. Let's see. Yeah, probably about 5 more minutes. Again, if you guys aren't TrendSpider users yet, I will drop a link down below for you guys to check out the platform. We're only getting better. We have tons of new custom indicators that were just added. Yes, and hit the like button. Thank you, Alan. Hit the like button and subscribe so you guys can be reminded once we go live. Appreciate you guys all for showing up. But this should be a fun earnings announcement because, again, AVGO, Broadcom, this stock that's about to report earnings here in a few minutes, is the 6th highest holding in the NASDAQ 100, which is one of the main indexes in the market, the QQQ, as I'm sure you guys know it by. I don't know. I'm not hoping for this to do bad. I want stonks to move up as much as everyone else. If you have puts, understandable, I guess. Yeah, if NVIDIA numbers is a guide, you're right. AVGO should crush earnings and revenue. That is probably true. Rocks, no. No, we're not shorting. We don't short. We want stonks to move up. But yeah, I mean, yeah, it's already up very much, but yeah, I don't know. I'm more of a permable. I don't short any stocks these days. Rarely even hedge these days. So we'll see. Yeah, Wall Street Bets is not the best community out there. Lulu numbers let me pull them back up again. Basically, the story with Lulu is the forward guidance was really bad. If we take a look at the numbers, though, the actual numbers, it looks like, let me see the news tab. EPS beat, sales missed. 2.525 billion versus 2.538 for revenue expected. And EPS beat by like 20 cents a share, which is pretty good. But the big news for that one was they lowered the guidance from like quite a bit. So guidance from, let's see, GAAP EPS guidance from 1458 to 1478 to 1277 to 1297. That is very bad. Revenue 1115 to 1130 billion to 10.85 to 11 billion. So both lowered. Not the greatest look on Lulu. That's what I watch mostly going into earnings. Let me put on the Mentor Q gamma levels here again, because I'm curious to see where they are. That's the 1 minute chart, so they're way up there. And yeah, that's the expected move up here, guys. 314 on AVGO. And that's the upside move. We are sitting at 307. It's probably 1 minute until we get a release. It's moving up. It just hit a new high in after hours session, a new after hours high. Not a new intraday high. It's right around the intraday high. I'll draw a horizontal line here at this recent peak it made today. That'll be probably a significant level to watch. That is the Mentor Q indicator. I'll drop another link to it down below in the chat right now for you. It's called the Mentor Q Gamma Levels. It is a custom indicator that they brought over to TrendSpider, but do keep in mind that it does require a Mentor Q API key. But in that link I sent, we do have a discount for you guys to use to sign up for Mentor Q if you wanted to. It is a sweet indicator, though. It basically plots gamma levels on your chart and the 1-day min, 1-day max, call resistance, put supports. Oh, all right. AVGO is falling off of my chart to the downside. Whew, that was crazy. Let me refresh my news widget here. Numbers were definitely just released. I'll get them for you guys just a second probably. But yeah, AVGO is dumping hard. 1-day min is 290. That's where the expected move is to the downside. Yeah, if you guys are watching, oh, they're going right back up. Please subscribe. If you guys didn't know, we do stream quite a bit now, posting videos. Wow, AVGO is moving back up. Hit the like, hit subscribe if you are new here, because we do stream quite a bit for these earnings. Glad to have you guys all here. But wow, that was insane. What percent move are we looking at here? This thing's moving 5% in 1-minute candles. Crazy wick to the downside. Wow. It hit the 1-day max almost to the T. Let me see. Keep refreshing the news widget. All right, here we go. Broadcom beats EPS. Sales beat. So double beat. Double beat. So congrats to the bulls. At least we'll see what happens. It had a really crazy reaction to the downside at first. Hopefully it holds. You can see this previous intraday high it hit is right here marked on the chart. Kind of use that as a support with this wick. Yeah, but exact numbers here. We got $1.69 per share for EPS, which beat $1.65. That's about a 2% beat. And then it looks like 36% year over year increase. Yeah, that's pretty nice. Let me delete this seasonality. Yeah, I think this is updated, question mark. And we're dropping back down. AVGO does not know what to do right now. It looks like guidance came in. Broadcom sees Q4 sales at 17.4 billion versus 17 billion estimate. So a little bit better forward guidance, which is great. So double beat and good guidance. Couldn't really ask for more if you're bullish. Yeah, Rox, that happens. That happens in earnings. It just gets crazy after hours. Yeah, it's probably going to get some more movement here, honestly, but we'll see, because it really hasn't done a whole lot to either side at this point. We closed around, I think, like 306 or so, and we're at 304, basically 305. So yeah, pretty crazy stuff. Pretty crazy stuff. I will get you that guidance. Rocks, if you're talking about what, AVGO, Broadcom, yes, it was a very bullish, fundamentally strong earnings report. But keep in mind, so did NVIDIA. They had a good earnings report too, and they came down. So you never, that's what I was saying. You just never know. Yeah, it's looking exactly like NVIDIA. Pretty much a great earnings beat, but practically no movement. Yeah, you are very correct. It is just like NVIDIA all over again. Let me pull up. I'm going to use Sidekick to give you guys some, what's it called? Some analysis of this real quick. Let me pull up a good prompt that I have. open Sidekick. Sidekick is incredible, by the way. It's one of my favorite use cases to analyze recent earnings. I'll start with AVGO. Yep. Tomorrow sell bar, that's going to be a tough one. It's probably not going to do a whole lot if it continues this price movement, not picking either direction. Yeah, I don't know. It's hard to say what's going to happen tomorrow. We'll see during the conference call. That's probably going to be here in about 40 minutes, exactly what happens in that. But last time with the NVIDIA call, I don't think much happened after the initial move. It kind of just ended pretty flat. Yes, Sidekick does pick up real-time news. It has access to our vetted news data right here. And you can see it's analyzing the earnings report that just dropped literally right now. And as you can see, reported aftermarket close, solid beat on both metrics, of course, and then guidance at 17.4 versus 17 billion consensus. Let me give you guys this brief summary in the chat. Hopefully that's not too long. Yeah, it was 2 messages, whatever. But there's your summary for AVGO. And you can also use the widget up here to go ahead and see what's going on. Basically, pretty big year-over-year changes. And I think it was the surprises that were interesting. Year-over-year growth was pretty good. Looks like on the reports widget, I'm seeing a 20% revenue year-over-year growth, and then a 43% year-over-year growth in EPS. Here is, I need to extend this out a little bit. Sidekick. So this Sidekick pulls from, I believe, like the actual SEC filings. We have a couple different fundamental data that it can access from. And since it's so recent, it kind of just depends on which one comes out first. But it's saying 36% year-over-year EPS growth and 22% EPS or revenue growth for Broadcom. Then we have the valuation compared to NVIDIA, AMD, Qualcomm, Apple, and Microsoft here. By the way, if you guys aren't on TrendSpider yet, everybody that has an account can use this Sidekick, at least get some free messages in, and it's so useful. Honestly, it's great for doing this stuff, like analyzing recent earnings, like I'm doing right now. We already kind of looked at this here, but this is a table comparing AVGO. Yeah, so someone said the market cap is wrong. It's because this updates depending on which data it pulls from, which might not be the most up-to-date, depending on which file it gets from. If it pulls it from an SEC file, it's going to be like last quarters. So it'll be sometimes slightly off. But in general, it does pull real data from somewhere, whether or not it's a recent SEC filing or the data that we have that goes from reports widget. But it is not like hallucinate data. There's just multiple data sources it can pull from. But as you can see, AVGO here, pretty flat still, pretty flat. Let me copy this prompt and I'll do the same thing for Lulu. Why is it going down? Honestly, I would say sometimes, yeah, it is because of outlook, aka forward guidance, but the forward guidance was good. It could just be the AI kind of hype is kind of dying. Yeah, the P ratio is pretty extended. That's just sometimes how it goes, you guys. If I pull up the daily chart, and I mean, you can see it's been rallying for quite a while now. Ever since the bottom, it is up, about 120% from the April bottom. So, I mean, it's not always just going to, rip and rally on a beat. But, I mean, honestly, I think NVIDIA did worse price action wise. I pull up the NVIDIA daily chart. You can see on their earnings, they kind of had this little dip right there. So, yeah, honestly, pretty similar. It was great earnings fundamentally. But again, price action does not always have to perfectly follow that. Let me see what Lulu looks like on the daily real quick. Man, that is brutal. Hold on. I want to see the weekly now and turn off these gamma levels. Yeah. Wow. So Lulu, the recent support is like 185 from that low. We're at 178. So pretty not great for Lulu. Let's pull up the 5-minute here. And let's see what Sidekick says. So here is the numbers for Lulu. I'll post this in the chat. Lulu reported earnings September 4th. Obviously, EPS beat by 8.8% versus the estimate, but revenue missed by 0.5%. Company lowered guidance significantly below expectations, causing the stock to decline. Guidance tone was negative due to dynamic political and economic conditions affecting consumers, aka most likely tariffs. And we can see right here, the EPS did surprise to the upside. Revenue slightly down. Year over year, revenue did grow apparently. So honestly, lots of green bars there on our reports tab. But that guidance, guys, that'll do it. Yeah, the thing about AI is that it's incredibly expensive to run. Like, for example, Sidekick is not cheap, you guys, to run these prompts. And so, like ChatGPT, for example, I don't think they're profitable still, like not even close to being profitable. Last time I remember, ChatGPT was not profitable. I haven't looked into them in a while, but all these AI tools are incredibly useful, but for the companies putting them out, it is expensive to run them. Yeah, again, the PE ratios are accurate, but sometimes it pulls from previous SEC filings from last quarter, which is why sometimes they are not fully up to date. KT, I know. Let's see. Lulu trades at higher valuations. Yada yada. Yeah, I mean, AI, it's definitely not. It's super useful, but not super profitable unless you do it really smartly. Like, there's no way ChatGPT makes money on a $20 a month subscription to a guy like me that absolutely uses it a ton, and every time it gets prompted, costs them money. Let's pull up DocuSign. So DocuSign's doing pretty well, if anyone cares about DocuSign anymore. Man, I didn't realize AI was such a controversial topic, you guys. Wow. AVGO's right here. I mean, I love using AI. It's super useful. But, I mean, he's got to understand both sides. It's also expensive to run. Takes a lot of energy. Only AI I'm holding is BBAI. Interesting. Yeah, NVIDIA has done so well. Let's actually see what NVIDIA is doing. But NVIDIA does so well because they're just powering AI. They don't have to, they're just selling basically the shovels to the gold miners, if you want to use that reference. All AI requires GPUs to run, and these chip companies are just selling it to them. Companies like ChatGPT, they're buying them, and it's not necessarily profitable for them. Yeah, I guess the training. I am no super crazy AI expert or anything. CRM got clapped, someone says. See, CRM, Salesforce. Is this moving after hours? They had earnings yesterday for CRM. Yeah, they got hit pretty good on earnings CRM from yesterday. About down like 9% or so. Let's see, what else? AMD. Let's see how AMD is reacting to this announcement. AMD not really doing a whole lot. I don't think NVIDIA was. Let's see what Intel is doing. Intel is very interesting with the government stake. They've actually been doing pretty well as of late, of course, since that news. Expect the guidance. Yeah, I mean, the guidance was good on AVGO as well. I believe it was on NVIDIA too. So, yeah, we'll see what happens during like the earnings call. I don't think it's going to get a whole lot more movement. Something also cool that you can do on TrendSpider here is open a stock market map. I have the SMH holdings, which is the semiconductor ETF, loaded in. And I have I have the holdings up here on my top right. I kind of marked all the bigger companies. And the way to read this is that I have this 7-day calendar change on the horizontal axis. So anything far to the right has been doing good over 7 days. And the vertical axis, I have 30-day change. So anything to the top is doing good over the last 30 days. So basically you want to see stuff to the top and to the right. It looks like MU is doing pretty good over both. NVIDIA and AMD, not so hot. And then Intel's doing really good over the last 30 days, as you can see pretty clearly up there. So interesting stock market map here. You just access it from the bottom. It's a bubble chart. What's the chart underneath the EPS bars? This one, that's just news. This is our live news widget. Oh, maybe you're talking about the seasonality chart I had up earlier. This is seasonality. Let me go and close this real quick. But basically seasonality. Who was asking? Yeah, I was looking at the seasonality earlier. I'll zoom in for a second. This shows by month over the last 16 years, which I think is since inception for AVGO, at least that we have data for, which months have been profitable, what percent of the time, and then also the mean change percent during that month. So in September, only 41% of Septembers over the last 16 years have been profitable, is what this is saying, with a mean change of 0.68%, which means in September, if it is up, it's only up 41% of September's, which is not very good. Of course, the worst month for them is April. And I did pull that same thing for SMH. And it kind of lines up. September is just a bad month for semiconductors. This is over the last 25 years. So whatever the reason is, September is the worst month for semiconductors. And it's really kind of following that pace. As you guys can see, NVIDIA has been slowing down since September. I'll put on the monthly chart. Yeah, it's still actually technically green right now, but yeah, it's not constantly moving up. Let's pull up SMH, the overall. It's actually doing pretty good since the start of September, this SMH ETF, which is semiconductors. Let me see how QQQ is moving. QQQ actually went up a little bit after hours. Interesting. And again, AVGO is the 6th largest holding in the NASDAQ 100, or the QQQ. Very interesting on QQQ. Over the last 27 years, QQQ, September is the worst month, or almost the worst month, 48%. But if you go to more recent times, like not since like 99, I think it gets like even worse. Things like, yeah, if you go from like 2016, February and September, you know, just generally in October, even just not that good historically for the overall market. This is QQQ, and see those bars are red. So it's something to keep in mind. The market does look great today, though, you guys. SPY is nearly at all-time highs. Also up in after hours. Let's check out the small caps, IWM. IWM is doing very good as well. Kind of almost trying to push this recent all-time high resistance, basically around 245 or so. So yeah, AVGO is actually moving up right now. Sitting at 308.83. Put on the gamma levels again. 1-day max, look at that. Right at the 1-day max. Basically got rejected on that wick. Crazy wick based on the earnings drop. Again, if you guys are out there in the audience and are enjoying this analysis, like to look at live streams of the markets with all of this awesome data that we have on TrendSpider, hit the like and subscribe so you don't miss out. So we're always going to be doing these lives and dropping some good content for you guys, building indicators, building scans, you name it, for you guys to use. This is the 1-day max. I don't believe the 1-day max is calculated via gamma. It's more so just kind of like, options use the Black-Scholes model. Depending on volatility, they do have an expected move based on like the option pricing. It's more similar to that rather than gamma, but the gamma levels here are the call resistance and the gamma wall, of course, and then the put supports are the main gamma levels on this indicator. And then there's the JEX levels, which are kind of like the less significant gamma levels. There is some, I was actually going to pull it up. I'll pull it up now for put call ratio. We have this flow bot. This was actually one of the winners of our hackathon. And what it does show unusual options activity. I'm going to try putting on the overlay dedicated axis. Above all, let me zoom out a little bit here so we can see. But this is the flow bot indicator. It's pretty interesting. Hide that real quick. What this does is it gives you an overall sentiment, and this is all pulled from, like TrendSpider's unusual options activity data for AVGO. And yeah, it does have the put call ratios for the specific DTEs and for the specific strikes here. As you can see, it basically lists the top strikes by premium. The highest strike by premium right now is the 290, which is an in-the-money call, and then an out-the-money put, of course. A lot more puts were bought. Put call ratio then is very high at 17, and there's the 7 to 14 days to expiration. So this is the flow bot indicator. Again, this is a indicator submitted by one of the community members that actually won $2,000 just recently. We just announced the winners of the TrendSpider hackathon. If you guys didn't know, we had a bunch of the community build and submit indicators, submitted them to our hackathon, and we announced $10,000 in cash prizes that are just recently paid, I think, today. So congratulations if anyone's out there that built some of these indicators, some pretty awesome stuff. And this one is called the Flow Bot. Let me see if I can get the store. link for this. And yeah, you can customize the DTEs on this indicator too, which is nice. Copy this. Here's the Flowbot indicator. Is that the whole link? Here we go. There we go. But what else are you guys watching other than AVGO? Is there any other trades you guys are in? Hide that for now. Put on the gamma levels, put on the 15-minute because it looks like the move is kind of done. Again, hit that one-day max. Let's check out Lulu on the gamma levels. Oof, yeah, Lulu cannot be stopped. Broke through the one-day minimum, the 0 DT put support, and the put support. Got nearly to that one-day max. So we saw a full range on Lulu today. DocuSign broke over that one-day max, so probably call buyers will be happy in DocuSign. Kind of, yeah, they actually have really good revenue growth. I don't really watch this stock anymore personally, but it's doing pretty good, at least today. Let's see, FNMA, FMCC. I don't know. What else do we got? Let's pull up the market scanner. One of the most awesome things about TrendSpider, you guys, is the market scanner. Let me pull this up. And I'm going to scan throughout the S&P 500. Or actually, I'll do the S&P 500. And I just want to scan for upcoming earnings. You can just do earnings dates. Within the next X days, let's do the next 60 days. So here's a bunch of stocks with earnings over the next 60 days. We got AVGO, I think this is. Yes, AVGO. Let's do actually a little bit more recent. Let's do like 21 days, next 3 weeks. AVGO earnings were very good, but the price action was not very good. Oh, by the way, people have been commenting about the fundamental data. We do have this valuation table as well that was a custom indicator that was submitted to the hackathon that uses the Alpha Vantage API, which is interesting. It won the data integration category. And as you can see here, it has the PE, forward PE. This is the Alpha Vantage fundamental data being pulled in via their API, which is pretty cool. So forward PE on here is listing at around 36, PE around 110. And then cool thing about this valuation table, let me drop a link for it for you guys too before I forget. Oh, it's the valuation dashboard, sorry, it's called. Yeah, Monkey Man, I'll do that real quick, but I can just want to show you guys, you can weight these different fundamental metrics. So if you want to put more weight on the forward P ratio, you can change that to 5, for example, and it calculates a composite score right there. Anything above 70 is considered bullish. Anything below 30 is considered bearish. And Monkey Man, you're looking for the earnings scan within the next 21 days, but you wanted to add a condition group with the RSI rising. That's interesting. Let's do indicator. I guess we'll do daily RSI. We actually have a lot of RSI indicators now. I think I'll just type relative strength index. And then we'll do for a rising RSI. So you want the current, the last RSI. Oh, hold on. Let me just do this real quick. Greater than indicator. I'll explain in a sec. Strength. If I can type out the strength index. So what are we looking at here? We want the RSI to be rising, right? So we want the current RSI to be greater than it was X days ago. So we'll define a rising RSI as it now is greater than it was 10 days ago, we'll say. So let's see what this scan brings up now. So now all these stocks, actually quite a few less, have a rising RSI and have earnings coming up over the next 3 weeks. ACN, Adobe. This is interesting. While we have this up, there's actually a sick new RSI divergence indicator that I can put on our chart. And this is using the RSI 14, 70, 30. Let me make sure these match. RSI 14 should be the same. Yeah, maybe we want to make it more than 10 counts. Let's try 30 days ago. Hold on, let me see if this matches up with our relative strength index built in. And so generally these should, unless I'm doing this wrong, should have RSI. Oh, no, I'm an idiot. Okay, I have to be putting it here. So RSI last is greater than 30 candles ago. There we go. I think that was the opposite direction. There we go. So these are rising RSI. I was looking for a decreasing RSI. I was like, what is going on here? So FDS, Costco should be fun. Rising RSI there. Let me put back on that divergence, RSI divergence indicator. See if we can find any bearish divergences or bullish ones. What this RSI divergence indicator does is it plots bullish and bearish divergences right on your chart with these red and green lines. There is spotting one on AVGO here that does have a rising RSI. And this is very debatable. Very, very close. But the RSI did make a lower high while price made a higher high, which is bearish because it's showing that price action is, or RSI is not keeping up with the higher high in the price action. See if there's anything else. But yeah, this indicator is awesome because it's just a regular RSI, but it draws the divergences for you. I'll drop a link for it. Really, I think there's no point in using the regular RSI when you can just have this one, which is the same thing, except for it draws the divergences too for you. There's actually a couple on GIS, General Mills. There's a couple bullish divergences here. You can see the RSI making these higher lows while price made a lower low. So yeah, maybe that'll play out at some point. Rising RSI there. But yeah, if there's any other scans or anything else you guys want to see, let me know. I can throw something together. Again, if you guys are not TrendSpider users yet or are new to this stream, hit the subscribe button, hit the like button, and tune in more. So we're always live. Love to see you guys out there chatting. RR, like stock ticker RR. Not sure what that is, but there is a really good, I think, divergence on Ethereum. We went over this one in our live winner reveal as we're covering the RSI divergence indicator. As you can see, the indicator or the RSI was making a lower high pretty clearly right here. And then the price made a higher high on that. And this marked that bearish divergence right there. Again, RSI momentum is slowing down because it made that, lower high. The price was hitting like all-time highs during that time, which is a bearish divergence. So again, it's just an RSI indicator, but with these divergences plotted, which is insanely useful. And I think there is one, let's check AVGO. A few bearish divergences here on AVGO's daily, kind of in the past. It was like right here. Yeah, this was the divergence here. Price made a higher high and RSI made a lower high. So there was a bearish divergence that finished right about here on August 12th. And we've actually gone down since then, honestly. So pretty cool stuff there. We also, I put some scans together for the Mentor Q indicators recently as well. Go back to the 15-minute here. Actually, let's go to the 30-minute. Basically, you can find stocks hitting these put supports automatically and some other indicators. Like, for example, I built one using the Mentor Q put support and RSI, the combined RSI ensemble showing surely oversold. The market isn't open anymore. Let's see if anything even pops up. HUT. So what this scanner does is it finds stocks at 1%, like within 1% of the put support, which is very powerful in itself, and also with 3 different RSI lengths showing oversold. Now, if I put on our combined RSI ensemble indicator, and this indicator just paints candles based on 3 different RSI lengths. If 3 different RSI lengths are oversold, they're green and bright green for all 3. And as you can see here, put support and the RSI ensemble is showing green. This is on the 30-minute chart, by the way. So that, I thought that was a cool one. Maybe there's more call resistance ones today since the market is a little more bullish. Let's take a look. The market's also closed. Yeah, nothing right now. Since the market's closed, probably won't be as useful. But we can remove these and see if there's anything sitting at call resistance in general. Nothing really. All right. That's all right. Let's see if there's any put support. I guess since the market's closed, doesn't matter as much. Here's a lot of that put support actually. Wow. So this is anything sitting at put support, or within 1% of put support at least. BABA. This is pretty intraday. Yeah, BABA is sitting at. Well, let's see what BABA is doing. Yes, earnings were out quite a bit ago actually. AVGO pretty much beat across the board. So beat EPS, beat better forward guidance. So very good earnings on AVGO, but again, it did not do that well. It's actually a really interesting chart on BABA's daily. One, there's put support that was bounced off multiple times here. And then this combined RSI ensemble indicator kind of actually ticked these bottoms on BABA a few times. See these dark, or yeah, these lighter green candles means 3 different RSI lengths were oversold. Right here at the bottom, actually. So that was pretty cool. If anyone trades BABA here, they've been doing pretty good recently. They had pretty good earnings, looks like. It's about a week or a couple days ago. Yep. Yeah, earnings call could come in and change up AVGO. Let's take a look at the AVGO chart again. We've been live for about an hour, though, you guys. Probably will call it here soon. I think most of the movement's probably done. Let's go to after hours movement. Yeah, AVGO is dead flat. Like literally dead flat. So kind of similar to what happened with NVIDIA. Honestly, no movement. Let's take a look at the semiconductor list overall. Looks like MU is up really good today. MU revenue growth has been pretty nice lately. Okay, let's see. Intel's been doing good. Marvell. Marvell's actually been doing pretty bad since earnings. QCOM. Of course, AVGO. TSM's been doing nice, nearly at all-time highs. Is there any movement on NVIDIA? NVIDIA's sitting at this kind of support level right now. Draw a horizontal line right around there at 167. Has been bouncing off that a few times, kind of about 3 times now, or even 4. It's hit this level many times. Hello to everybody just tuning in. We've been live for about an hour though right now, you guys. If you are new, hit that subscribe button so you can catch our next earnings stream. But yeah, AVGO earnings already came in. Again, double beat. You can see it right here on EPS and revenue tab. And great forward guidance. Tesla. Take a look at Tesla. Tesla's been pretty choppy, but I mean, they've been overall making these higher lows at least. Let's check out. I want to see this RSI. I love using this RSI indicator now. Doesn't look like it's spotting really any divergences. RSI is really just chilling right in the middle. Yeah, it needs to pick a direction, Tesla. Definitely needs to, let me see. Last time I just streamed the call and just had the call open. There's no point in me just sitting here with nodding my head while everyone listens to the call, but let me see if I can find it. Okay, let me put in a name. If you guys hear that other music playing, that is actually the earnings call. Turn off our music. Can you guys hear that little music? Because that will be the earnings call when it's live. But if you guys hear that call, something let me know in the chat, and then you should be able to hear the earnings call when it comes up. I think the earnings call is starting. Supposed to start anyway. 2 p.m. All right, 2 minutes till this call is supposed to actually start. I'm just waiting here for that to happen. Let's get this loaded up. Someone can let me know if you guys hear the music. That would be incredible, just so I know it's working. Sweet, thank you. Got about 1 minute till this call starts. We'll go ahead and stream it for you guys. AVGO chart is doing literally has pretty much not moved. If I open the daily candle, it is up a little bit on the day. But yeah, since close, I mean, the option sellers will be happy tomorrow. Let's just put it that way. So they close at 306.10 and we're at 306.34. We are literally at the close price. And we did have a 5% swing. What I mean is, since the stock isn't moving, people that sold options, when you sell options, you make money with the stock basically not moving. Because yeah, when you like buy a call, for example, you want the stock to move up a lot. But if you do the opposite and you sell a call, you don't want this. You either want the stock to go down or just not move at all, because theta decay or time decay just makes the options cheaper. So it's basically option shorters, I guess. That's another way to say it. Yep, exactly. Make the premium. Yeah, as far as revenue growth, yeah, they have peaked at like 51% year over year, and they're down to 22% this quarter. EPS growth was pretty nice. Yep, Lulu definitely, absolutely dumped. Reminds me. Oh, the call is starting.
Welcome to Broadcom Inc.'s third quarter fiscal year 2025 financial
Let me know if
results
y'all hear
conference
this
call.
call.
At this time, for opening remarks and introductions, I would like to turn the call over to Ji Yu, Head of Investor Relations of Broadcom Inc. Please go ahead.
Thank you, Cherie, and good afternoon, everyone. Joining me on today's call are Hock Tan, President and CEO, Kirsten Spears, Chief Financial Officer, and Charlie Kawaz, President, Semiconductor Solutions Group. Broadcom distributed a press release and financial tables after the market closed, describing our financial performance for the third quarter of fiscal year 2025. If you did not receive a copy, you may obtain the information from the investor section of Broadcom's website at broadcom.com. This conference call is being webcast live, and an audio replay of the call can be accessed for 1 year through the investor section of Broadcom's website. During the prepared comments, Hock and Kirsten will be providing details of our third quarter fiscal year 2025 results, guidance for our fourth quarter of fiscal year 2025, as well as commentary regarding the business environment. We'll take questions after the end of our prepared comments. Please refer to our press release today and our recent filings with the SEC for information on the specific risk factors that could cause our actual results to differ materially from the forward-looking statements made on this call. In addition to U.S. GAAP reporting, Broadcom reports certain financial measures on a non-GAAP basis. A reconciliation between GAAP and non-GAAP measures is included in the tables attached to today's press release. Comments made during today's call will primarily refer to our non-GAAP financial results. I will now turn the call over to Hock.
Thank you, G, and thank you everyone for joining us today. In our fiscal Q3 2025, total revenue was a record $16 billion, up 22% year on year. Now, revenue growth was driven by better than expected strength in AI semiconductors and our continued growth in VMware. Q3 consolidated adjusted EBITDA was a record $10.7 billion, up 30% year on year. Now, looking beyond what we're just reporting this quarter, with robust demand from AI, bookings were extremely strong. and our current consolidated backlog for the company hit a record over $110 billion. Q3 semiconductor revenue was $9.2 billion, as year-on-year growth accelerated to 26% year-on-year. And this accelerated growth was driven by AI semiconductor revenue of $5.2 billion, which was up 63% year-on-year and extend the trajectory of robust growth to 10 consecutive quarters. Now, let me give you more color on our XPU business, which accelerated to 65% of our AI revenue this quarter. Demand for custom AI accelerators from our three customers continued to grow as each of them journeys at their own pace towards compute self-sufficiency. And progressively, we continue to gain share with these customers. Now, further to these three customers, as we had previously mentioned, we have been working with other prospects on their own AI accelerators. Last quarter, one of these prospects released production orders to Broadcom, and we have accordingly characterized them as a qualified customer for XPUs, and in fact have secured over $10 billion of orders of AI racks based on our XPUs. And reflecting this, we now expect the outlook for fiscal 2026 AI revenue to improve significantly from what we had indicated last quarter. Turning to AI networking, demand continued to be strong because networking is becoming critical to continue to evolve in intelligence, and compute clusters have to grow bigger. The network is the computer, and our customers are facing challenges as they scale to clusters beyond 100,000 compute nodes. For instance, scale up, which we all know about, is a difficult challenge when you're trying to create substantial bandwidth to share memory across multiple GPUs or XPUs within a rack. Today's AI rack scales up a mere 72 GPUs at 28.8 terabit per second bandwidth using a proprietary NVLink. On the other hand, earlier this year, we have launched Tomahawk 5 with Open Ethernet, which can scale up 512 compute nodes for customers using XPUs. Moving on to scaling out across racks, today the current architecture using 51.2 terabit per second requires 3 tiers of networking switches. In June, we launched Tomahawk 6 and our Ethernet-based 102 terabit per second switch, which flattens the network to 2 tiers, resulting in lower latency, much less power. And when you scale to clusters beyond a single data center footprint, you now need to scale computing across data centers. And over the past 2 years, we have deployed our Jericho 3 Ethernet router with hyperscale customers to just do this. And today, we have launched our next generation Jericho 4 Ethernet fabric router with 51.2 terabit per second deep buffering, intelligent congestion control to handle clusters beyond 200,000 compute nodes crossing multiple data centers. We know the biggest challenge to deploying larger clusters of compute for generative AI will be in networking. And for the past 20 years, Broadcom has developed for Ethernet networking is entirely applicable to the challenges of scale up, scale out, and scale across in generative AI. And turning to our forecast, as I mentioned earlier, we continue to make steady progress in growing our AI revenue. For Q4 2025, we forecast AI semiconductor revenue to be approximately $6.2 billion, up 66% year on year. Now, turning to non-AI semiconductors, demand continues to be slow to recover, and Q3 revenue of $4 billion was flat sequentially. While broadband showed strong sequential growth, enterprise networking and server storage were down sequentially. Wireless and industrial were flat quarter on quarter, as we expect. In contrast, in Q4, driven by seasonality, we forecast non-AI semiconductor revenue to grow low double digits sequentially to approximately $4.6 billion. Broadband, server storage, and wireless are expected to improve, while enterprise networking remains down quarter on quarter. Now, let me talk about our infrastructure software segment. Q3 infrastructure software revenue of $6.8 billion was up 17% year on year, above our outlook of $6.7 billion, as bookings continue to be strong during the quarter. We booked, in fact, total contract value over $8.4 billion during Q3. But here's what I'm most excited about. After 2 years of engineering development by over 5,000 developers, we delivered on a promise when we acquired VMware. We released VMware Cloud Foundation version 9.0, a fully integrated cloud platform which can be deployed by enterprise customers on-prem or carried to the cloud. It enables enterprises to run any application workload, including AI workloads, on virtual machines and on modern containers. This provides the real alternative to public cloud. In Q4, we expect infrastructure software revenue to be approximately $6.7 billion, up 15% year on year. And in summary, continued strength in AI and VMware will drive our guidance for Q4 consolidated revenue to approximately $17.4 billion, up 24% year on year. And we expect Q4 adjusted EBITDA to be 67% of revenue. And with that, let me turn the call over to Kirsten.
Thank you, Hock. Let me now provide additional detail on our Q3 financial performance. Consolidated revenue was a record $16 billion for the quarter, up 22% from a year ago. Gross margin was 78.4% of revenue in the quarter, better than we originally guided on higher software revenues and product mix within semiconductors. Consolidated operating expenses were $2 billion, of which $1.5 billion was research and development. Q3 operating income was a record $10.5 billion, up 32% from a year ago. On a sequential basis, even as gross margin was down 100 basis points on revenue mix, operating margin increased 20 basis points sequentially to 65.5% on operating leverage. Adjusted EBITDA of $10.7 billion, or 67% of revenue, was above our guidance of 66%. This figure excludes $142 million of depreciation. Now a review of the P&L for our two segments, starting with semiconductors. Revenue for our Semiconductor Solutions segment was $9.2 billion, with growth accelerating to 26% year-on-year, driven by AI. Semiconductor revenue represented 57% of total revenue in the quarter. Gross margin for our Semiconductor Solutions segment was approximately 67%, down 30 basis points year-on-year on product mix. Operating expenses increased 9% year-on-year to $961 million on increased investment in R&D for leading-edge AI semiconductors. Semiconductor operating margin of 57% was up 130 basis points year-on-year and flat sequentially. Now moving on to infrastructure software. Revenue for infrastructure software of $6.8 billion was up 17% year-on-year and represented 43% of revenue. Gross margin for infrastructure software was 93% in the quarter compared to 90% a year ago. Operating expenses were $1.1 billion in the quarter, resulting in infrastructure software operating margin of approximately 77%. This compares to operating margin of 67% a year ago, reflecting the completion of the integration of VMware. Moving on to cash flow. Free cash flow in the quarter was $7 billion and represented 44% of revenue. We spent $142 million on capital expenditures. Day sales outstanding were 37 days in the third quarter compared to 32 days a year ago. We ended the third quarter with inventory of $2.2 billion, up 8% sequentially in anticipation of revenue growth next quarter. Our days of inventory on hand were 66 days in Q3 compared to 69 days in Q2 as we continue to remain disciplined on how we manage inventory across the ecosystem. We ended the third quarter with $10.7 billion of cash and $66.3 billion of gross principal debt. The weighted average coupon rate and years to maturity of our $65.8 billion in fixed rate debt is 3.9% and 6.9 years respectively. The weighted average interest rate and years to maturity of our $500 million in floating rate debt is 4.7% and 0.2 years respectively. Turning to capital allocation. In Q3, we paid stockholders $2.8 billion of cash dividends based on a quarterly common stock cash dividend of 59 cents per share. In Q4, we expect the non-GAAP diluted share count to be approximately 4.97 billion shares, excluding the potential impact of any share repurchases. Now moving to guidance. Our guidance for Q4 is for consolidated revenue of $17.4 billion, up 24% year-on-year. We forecast semiconductor revenue of approximately $10.7 billion, up 30% year-on-year. Within this, we expect Q4 AI semiconductor revenue of $6.2 billion, up 66% year-on-year. We expect infrastructure software revenue of approximately $6.7 billion, up 15% year-on-year. For your modeling purposes, we expect Q4 consolidated gross margin to be down approximately 70 basis points sequentially, primarily reflecting a higher mix of XPUs and also wireless revenue. As a reminder, consolidated gross margins through the year will be impacted by the revenue mix of infrastructure software and semiconductors and product mix within semiconductors. We expect Q4 adjusted EBITDA to be 67%. We expect the non-GAAP tax rate for Q4 and fiscal year 2025 to remain at 14%. I will now pass the call back to Hock for some more exciting news.
I don't know about exciting, Kirsten, but I do. I thought before we move to questions, I should share an update. The board and I have agreed that I will continue as the CEO of Broadcom through 2030 at least. These are exciting times for Broadcom, and I'm very enthusiastic to continue to drive value for our shareholders. Operator, please open up the call for questions.
Thank you. To ask a question, you will need to press star 11 on your telephone. To withdraw your question, press star 11 again. Due to time restraints, we ask that you please limit yourself to one question. Please stand by while we compile the Q&A roster. And our first question will come from the line of Ross Seymour with Deutsche Bank. Your line is open.
Hi, guys. Thanks for letting me ask the question. And Hock, thank you for sticking around for a few more years. So I just wanted to talk about the AI business and specifically the XPU. When you said you're going to grow significantly faster than what you had thought a quarter ago, what's changed? Is it just the impressive prospect moving to a customer definition, so that $10 billion backlog that you mentioned, or is it stronger demand across the existing three customers? Any detail on that will be helpful.
I think it's both, Ross, but to a large extent, it's the fourth customer that we now add on to our roster, which we will ship pretty strongly in 2026, beginning 2026, I should say. So a combination of increasing volumes from our existing three customers, and we move through that very progressively and steadily, and the addition of a fourth customer with immediate and fairly substantial demand really changes our thinking of what 26 would be starting to look like.
Thank you.
Thank you.
One moment for our next question. That will come from the line of Harlan Sur with JP Morgan. Your line is open.
Hi, good afternoon. Congratulations on a well-executed quarter and strong free cash flow. I know everybody's going to ask a lot of questions on AI, Hock. I'm going to ask about the non-AI semi business. If I look at your guidance for Q4, it looks like the non-AI semi business is going to be down about 7-8% year over year in fiscal 25 if you hit the midpoint of the Q4 guidance. Good news is that the negative year over year trends have been improving through the year. In fact, I think you guys are going to be positive year over year in the fourth quarter. You've characterized it as relatively close to the cyclical bottom, relatively slow to recover. However, we have seen some green shoots of positivity, right? Broadband, server storage, enterprise networking. You're still driving the DOCSIS 4 upgrade in broadband cable. You've got next-gen PON upgrades in China and the US in front of you. Enterprise spending on network upgrades is accelerating. So near term, from the cyclical bottom, how should we think about the magnitude of the cyclical upturn? And given your 30 to 40-week lead times, are you seeing continued order improvements in the non-AI segment, which would point you to continued cyclical recovery into next fiscal year?
Well, you know, and if you take a look at that non-AI segment, I mean, you're right. From a year-on-year Q4 guidance, we are actually up, as you say, slightly, 1 or 2% from a year ago. And it's not much really to shout about at this point. And the big issue is there are puts and takes. And the puts and takes, and the bottom line to all this is, other than seasonality that we perceive, if you look at it short term, without looking year on year, but looking sequentially, we see in things like wireless, and we even start to see some seasonality in server storage these days. It kind of all washes out so far. The only consistent trend we've seen over the last 3 quarters that is moving up strongly is broadband. And nothing else, if you look at it from a cyclical point of view, seems to be able to sustain an uptrend so far. I don't think it's getting, but as a whole, they are not getting worse, as you pointed out, Harlan, but they are not showing a V-shaped recovery as a whole that we would like to see and expect to see in cyclical semiconductor cycles. The only thing that gives us some hope is broadband at this point, and it is recovering very strongly. But then it was the business that was most impacted in the sharp downturn of 24 and early 25. So again, one takes that with a grain of salt. But best answer for you is non-AI semiconductor is kind of slow to recover, as I said. And Q4 year on year is up maybe low single digits is the best way to describe it at this point. So I'm expecting to see more of a U-shaped recovery in non-AI, and perhaps by mid-26, late 26, we start to see some meaningful recovery. But as of right now, not clear.
Are you starting to see that in your order trend, in your order book, just because your lead times are like 40 weeks, right?
We are. But we've been tricked before, but we are. The bookings are up, and they are up year on year in excess of 20%. Nothing like what AI bookings look like, but 23% is still pretty good, right?
Thank you. One moment for our next question. That will come from the line of Vivek Arya with Bank of America. Your line is open.
Thanks for taking my question, and best wishes, Hawk, for the next part of your tenure. My question is on, if you could help us quantify what is the new fiscal 26 AI guidance, because I think the last call you mentioned fiscal 26 could grow at the 60% growth rate. So what is the updated number? Is it 60% plus the 10 billion that you mentioned? And sort of related to that, do you expect the custom versus networking mix to stay broadly what it has been this past year, or evolve more towards custom? So any quantification and this networking versus custom mix would be really helpful for fiscal 26.
Okay, let's answer the first part first. If I could be so bold as to suggest to you, last quarter when I said, hey, the trend of growth of 26 will mirror that of 25, which is 50-60% year on year. That's really all I said. I didn't but of course it comes out 50-60% because that's what 25 is. All I'm saying, if you want to put another way of it, looking at what I'm saying, which is perhaps more accurate, is we're seeing the growth rate accelerate as opposed to just remain steady at that 50-60%. We are expecting and seeing 2026 to accelerate more than the growth rate we see in 25. And I know you love me to throw in a number at you, but you know what? We're not supposed to be giving you a forecast for 26, but best way to describe it, it will be fairly material improvement.
And the networking versus custom?
Good point. Thanks for reminding me. As we see, and a big part of this driver of growth will be XPUs. At the risk of repeating what I said in my remarks, comes from the fact that we are continue to gain share at our 3 original customers. They have to, they're on their journey, and each passing generation, they go more to XPUs. So we are gaining share from these 3. We now have the benefit of an additional fourth significant customer. I should say fourth and very significant customer. And that combination will mean more XPUs. And as I said, as the ratio, as we create more and more XPUs among 4 guys, the networking, we get the networking with these 4 guys, but now the mix of networking from outside these 4 guys will now be diluted, be a smaller share. So I expect actually networking percentage of the pool to be a declining percentage going into 2026.
Thank you, Hock.
And one moment for our next question. And that will come from the line of Stacy Rasgon with Bernstein Research. Your line is open.
Hi, guys. Thanks for taking my question. I was wondering if you could help me parse out this $110 billion backlog. Did I hear that number right? Could you give us some color on the makeup of it? Like, how far out does that go? And, like, how much of that $110 billion is AI versus non-AI versus software?
Well, I guess, Stacy, we generally don't break up backlog. I'm just giving a total number to give you a sense of how strong the business is as a whole for the company. And it's largely driven by AI as the growth in terms of growth. Software continue to add on a steady basis, and non-AI, as I indicated, has grown double digits. Nothing compared to AI, which has grown very strongly. Give you a sense, perhaps fully 50% of it, at least, is semiconductors.
Okay, and it's fair to say that of that semiconductor piece, it's going to be much more AI than non-AI.
Right.
Yeah, got it. That's helpful. Thank you.
One moment for our next question. And that will come from the line of Ben Reitzes with Melius. Your line is open.
Hey, guys. Thanks a lot. I appreciate it. Hock, congrats on being able to guide to the AI revenue well above 60% for next year. So I wanted to be a little greedy and ask you about maybe 27 and the other three customers or so. How's the dialogue going beyond these four customers? In the past, you've talked about having 7. Now we've added a fourth to production, and then there were 3. Are you hearing from others? And how's the trend going with the other 3, maybe beyond the 26 into 27 and beyond? How's that momentum, you think, going to shape up? Thanks so much.
Ben, you are definitely greedy and definitely overthinking this for me. Thank you. But that's asking for subjective qualification, and frankly, I don't want to give that. I'm not comfortable giving that because sometimes we stumble into production in time frames that are fairly unexpected, surprisingly. Equally, it could get delayed. So I rather not give you any more color on prospects than to tell you these prospects are real prospects and continue to be very closely engaged towards developing each of their own XPUs with every intent of going into substantial production, like the 4 we have today who are custom.
Yeah, you still think that million units by goal for these 7 though is still intact?
For the 3, I said. Now there are 4. That's still it. Only for the customers. For the prospects, no comment. I'm no position to judge on that. But for our 4 customers now, yes.
All right. Thanks a lot. Congrats.
One moment for our next question. And that will come from the line of Jim Schneider with Goldman Sachs. Your line is open.
Good afternoon. Thanks for taking my question. Hock, I was wondering if you could give us a little more color, not necessarily on the prospects which you still have in the pipeline, but how you view the universe of additional prospects beyond the 7, customers and prospects you've already identified. Do you still see there being additional prospects that would be worthy of a custom chip? And I know you've been relatively circumspect in terms of the number of customers that are out there and the volume that they can provide, and selective in terms of the opportunities you're interested in. So maybe frame for us the additional prospects as you see them beyond these 7. Thank you.
That's a very good question, and let me answer it in a fairly broader basis. Well, as I said before, and perhaps repeat a bit more. We're we look at this market in two broad segments. One is simply the guys, the parties, the customers who develop their own LLM. And the rest of the other market I consider is collectively lumped as enterprise. That is markets that will run AI workloads for enterprise, whether it's on-prem or GPU, XPU, or whatever as a service. The enterprise. We don't address that market, to be honest. We don't. That's because that's a hard market for us to address, and we're not set up to address that. We instead address this LLM market, and as I said many times before, it's a very few narrow markets, few players driving frontier models on a very accelerated trend towards super intelligence, for one, plagiarizing the term of someone else, but you know what I mean. And they are the guys who would invest, who need to invest a lot initially, in my view, on training of ever larger and larger clusters of ever more capable accelerators. But also, as for these guys, they got to be accountable to shareholders or accountable to being able to create cash flows that can sustain their path. They start to also invest in inference in a massive way to monetize their models. These are the players we work with. These are individually people or players who spend a lot of money on a lot of compute capacity, just that there are only so few of them. And I have identified 7, 4 of which now are customers, 3 continues to be prospects we engage with. And we're very picky and careful, I should say, shouldn't use the word picky, careful who qualifies under that. And I indicated it. They are building a platform or have a platform and are investing very much on leading LLMs models. And we're 7, and I think that's about it. We may see one more perhaps as a prospect, but again, we are very thoughtful and careful about even making that qualification. But right now, for sure, we have 7. And that, for now, is pretty much what we have.
Thank you.
One moment for our next question. And that will come from the line of Tom O'Malley with Barclays. Your line is open.
Hey, guys. Thanks for taking my question, and congrats on the really good results. I wanted to ask on the Jericho 4 commentary. NVIDIA talked about the XGS switch, and now is talking about scale across. You're talking about Jericho 4. It sounds like this market is really starting to develop. Maybe you could talk about when you see material uplift in revenue there and why it's important to start thinking about those type of switches as we move more towards inferencing. Thank you, Hock.
Great. Well, thank you for picking that up. Yes, scale across is the new term now, right? Thrown in. There's scale up, which is within the rack, which is computing within the rack. Scale out, doing across racks, but within the data center. But now when you get to clusters that are, I'm not 100% sure where the cutoff is, but say above 100,000 GPU or XPUs. That's, you're talking about probably in many cases because of limitation of power shell, that the data center, that you don't do one single data center footprint site to sit with over 100,000 of those XPUs in one site. Power may not be easily available, land may not be, it's cumbersome. So many, some outcomes, most of all our customers now we see create multiple data center sites close at hand, not far away, within range, 100 kilometers. It's kind of the level, but be able to then put in homogeneous XPUs or GPUs in this multiple locations, 3 or 4, and network across them so that they behave like, in fact, a single cluster. That's the coolest part. And that technology, which requires, because of distance, deep buffering, very intelligent congestion control, is technology that exists for many, many years in the likes of the telcos of AT&T and Verizon doing network routing. Except this is for even somewhat more trickier workloads, but the same. And we've been shipping that to a couple of hyperscalers over the last 2 years as Jericho 3. As the scale of these clusters and the bandwidth required for AI training expands, we now launch this Jericho 4, 51 terabit per second to handle more bandwidth, but same technology we have tested, proven for the last 10, 20 years. Nothing new. Don't need to create something new for that. It's running in Ethernet and very proven, very stable. And as I said, last 2 years under Jericho 3, which runs 256 connections, no compute nodes. We've been selling to a couple of our hyperscale customers.
One moment for our next question. And that will come from the line of Karl Ackerman with BNP Paribas. Your line is open.
Yes, thank you. Hock, have you completely converted your top 10,000 accounts from vSphere to the entire vSphere Cloud Foundation virtualization stack? I ask because I think last quarter, 87% of accounts had adopted that, and that's certainly a marked increase versus less than 10% of those customers who bought the entire suite before the deal. And I guess as you address that, what interest level are you seeing with the longer tail of enterprise customers adopting VCF? And are you seeing tangible cross-selling benefits of your merchant semiconductor storage and networking business as those customers adopt VMware? Thank you.
Okay. To answer your first part of the question, yeah, pretty much virtually way over 90% is bought VCF. Now, I'm careful about choice of words. Because we have sold them on it and they bought licenses to deploy it, doesn't mean they are fully deployed. Here comes the other part of our work, which is to take these 10,000 customers, or a big chunk of them, who have bought the vision of a private cloud on-prem, and working with them to enable them to deploy it and operate it successfully on their infrastructure on-prem. That's the hard work over the next 2 years that we see happening. And as we do it, we see expansion across their IT footprint on VCF, private cloud, running on their data set within their data centers. That's the key part of it. And we see that continuing. And that's the second phase of my VMware story. First phase is convinces people to convert from perpetual subscription, and so doing purchase VCF. Second phase now is make that purchase they made on VCF create the value they look for in private cloud on their premise, on their IT data centers. That's what's happening. And that will sustain for quite a while, because on top of that, we will start selling advanced services, security, disaster recovery, even AI, running AI workloads on it. All that is very exciting. Your second question is that able to enable me to sell more hardware? No, well, it's quite independent. In fact, as they virtualize their data centers, we consciously accept the fact that we are commoditizing the underlying hardware in the data center. commoditizing servers, commoditizing storage, commoditizing even networking. And that's fine. And by so commoditizing, we're actually reducing cost of investments in hardware in data centers for enterprises. Now, beyond this largest 10,000, are we seeing a lot of success? We're seeing some, but again, two reasons why we do not expect it to be as necessarily successful. One is the value, the TCO as they call it, that comes from it will be much less. But the more important thing is the skill sets that needs to not just deploy, that you can get services and ourselves to help them, but to keep operating it might not be something that they can take on. And we shall see. This is an area we're still learning, and it'd be interesting to see. Well, VMware has 300,000 customers. We see the top 10,000 as as being people where it makes a lot of sense, derive a lot of value in deploying private cloud using VCF. We now are looking at whether the next 20, 30,000 mid-sized companies see it the same way. Stay tuned. I'll let you know.
Very clear. Thank you.
One moment for our next question. And that will come from the line of C.J. Muse with Cantor Fitzgerald. Your line is open.
Yeah, good afternoon. Thanks for taking the question. I was hoping to focus on gross margins. I understand that the guide down 70 bips, particularly with software lower sequentially and greater contributions from wireless and XPU. But to hit that 77.7, I either have to model semiconductor margins flat, which I would think would be lower, or software gross margins to 95%, up 200 bips. So can you kind of help me better understand kind of the moving parts there to allow only a 70 bip drop?
Yeah, I mean, TPUs will be going up along with wireless, as I said on the call, and our software revenue will be coming up just a bit as well.
You mean XPUs?
XPUs, yes.
And one
more.
Wireless is typically our heaviest quarter, right, of the year for wireless. So you have wireless and TPUs with generally lower margins, right, and then our software revenue coming up.
And one moment for our next question. And that will come from the line of Joe Moore with Morgan Stanley. Your line is open.
Great, thank you. In terms of the fourth customer, I think you've talked in the past about potential customers 4 and 5 were more hyperscale, and 6 and 7 were more like, the LLM makers themselves. Can you give us a sense for if you could help us categorize that? If not, that's fine. And then the $10 billion of orders, can you give us a time frame on that? Thank you.
Okay. Yeah, no, it's to us at the end of the day, all 7 do LLMs. Not all of them have the huge platform we're talking about, but one could imagine eventually all of them will have or create a platform. So it's hard to differentiate the two. But coming on the second and the delivery of the 10 billion, I'll probably be in around, I would say, the second half of our fiscal year 2026. I would say, to be even more precise, likely to be Q3 of our fiscal 26.
Okay, Q3 it starts, or Q3 what time frame does it take to deploy 10 billion?
Starts and ends in Q3.
Okay, all right, thank you.
One moment for our next question. And that will come from the line of Joshua Buchalter with TD Cowen. Your line is open.
Hey guys, thank you for taking my question and congrats on the results. I was hoping you could provide some comments on momentum for scale-up Ethernet and how it compares with UA Link and PCIe solutions out there. How big of a how meaningful is it to have the Tomahawk Ultra's product out there with a lower latency? And how meaningful do you think the scale-up Ethernet opportunity could be over the next year as we think about your AI networking business? Thank you.
Well, that's a good question, and we ourselves are thinking about that too, because to begin with, Ethernet, our Ethernet solutions are very disaggregated from the AI accelerators anybody does. It's separate. We treat them as separate, even though you're right, the network is a computer. We have always believed that Ethernet is open source. Anybody should be able to have choices, and we keep it separate from our XPU. But the truth of the matter is, for our customers who use the XPU, we develop and we optimize our networking switches and other components that relate to being able to network signals in any clusters hand in hand with it. In fact, all these XPUs have developed with interface that handles Ethernet, very, very much so. So that's, in a way, with XPUs, with our customers, we are openly enabling Ethernet as a networking protocol of choice, very, very openly. And it need not be our Ethernet switches. It could be any other, but somebody else Ethernet switches that does it. It just happens to be we're in the lead in this business, so we get that. But beyond it, especially when it comes to a closed system of GPUs, we see less of it, except in the hyperscalers, where the hyperscalers are able to architect their GPUs clusters very separate from the networking side, especially in scale out. In which case, on those hyperscalers, we sell a lot of these Ethernet switches that does scaling out. And we suspect when it goes to scaling across now, even more Ethernet that are disaggregated from the GPUs that are in the place. As far as XPUs are concerned, for sure, it's all Ethernet.
Thank you.
One moment for our next question. That will come from the line of Christopher Rowland with Susquehanna. Your line is open.
Thank you for the question, and congrats on the contract extension, Hock. So yeah, my questions are about competition, both on the networking side and the ASIC side. You kind of answered some of that, I think, in the last question, but do you view any competition on the ASIC side, particularly from US or Asian vendors, or do you think this is decreasing? And on the networking side, do you think UA-Link or PCIe even has a chance of displacing SUE in 2027 when it's expected to ramp? Thanks.
Thank you for embracing SUE. Thank you. I didn't expect that to come out, and I appreciate that. Well, I'm biased, to be honest, but it's so obvious I can't help but being biased. Because Ethernet is well proven. Ethernet is so known to the engineers, the architects that sits in all these hyperscalers, developing, designing AI data centers, AI infrastructure. It's the logical thing for them to use. And they are using it, and they are focusing on it. And the development of separate individualized protocols, frankly, it's beyond my imagination why they bother. Ethernet is there. It's been well used. It's proven it can keep going up. The only thing people talk about is perhaps latency, especially in scaling up. Hence the emergence of NVLink. And even then, as I indicated, it's not hard for us, and we are not the only one who can do that, a few others in Ethernet can do it in the switches. You can just tweak the switches to make the latency super good, better than NVLink, better than InfiniBand, less than 250, nanoseconds easily, and that's what we did. So it's not that hard. And perhaps I say that because we have been doing it as Ethernet has been around the last 25 years at length. So it's there, the technology. There's no need to go and create some cook-up protocols that now you have to bring people around. Ethernet is the way to go, and there's plenty of competition too because it's an open source system. So I think Ethernet is the way to go, and for sure in developing XPUs for our customers, all these XPUs with the agreement of customers are made compatible interface with Ethernet, and not some fancy other interface that one has to keep going as bandwidth increase. And I assure you, we have competition, which is one of the reasons why the hyperscalers like Ethernet. It's not just us. They can find somebody else if for whatever reason they don't like us, and we're open to that. It's always good to do that. It's an open source system, and there are players in that market, not any closed system. Switching on to XPU competition, yeah, we hear about competition and all that. It's just that it's a competition that's it's an area that we always see competition, and our only way to secure our position is we try to out-invest and out-innovate anybody else in this game. We have been fortunate to be the first one creating this XPU model of ASICs on silicon. And we also have been fortunate to be probably one of the largest IP developers of semiconductor out there. Things like serializer, deserializer, SerDes, being able to develop the best packaging, being able to design things that are very low power. So we just have to keep investing in it, which we do, to outrun the competition in this space. And I believe we're doing a fairly decent job of doing it at this point.
Very clear. Thanks, Hock.
Sure.
Thank you. And we do have time for one last question, and that will come from the line of Harsh Kumar with Piper Sandler. Your line is open.
Hey guys, thanks for squeezing me in. Hock, congratulations on all the exciting AI metrics, and thanks for everything you do for Broadcom and sticking around. Hock, my question is, you've got 3 to 4 existing customers that are ramping. As the data centers for AI clusters get bigger and bigger, it makes sense to have differentiation, efficiency, etc. Therefore, the case for XPUs. Why should I not think that your XPU share at these 3 or 4 customers that are existing will be bigger than the GPU share in the longer term?
It will be. It's a logical conclusion, Harsh. You're correct. And we are seeing that step by step. As I say, it's a journey. It's a multi-year journey because it's multi-generational. Because these XPUs don't stay still either. I'm doing multiple versions, at least 2 versions, 2 generational versions for each of these customers we have. And with each newer generation, they increase the consumption, the usage of the XPU as they gain confidence, as the model improves, they deploy it even more. So that's the logical trend that XPUs will keep in these few customers of ours, whereas they are successfully deployed and their software stabilizers, the software stack, the libraries that sits on these chips stabilizes and proves itself out. They will have the confidence to keep using a higher and higher percentage of their compute footprint in their own XPUs, for sure. And we see that. And that's why I say we progressively gain share.
Thank you, Hawk.
Thank you. I would now like to turn the call back over to GU, Head of Investor Relations, for any closing remarks.
Thank you, Cherie. This quarter, Broadcom will be presenting at the Goldman Sachs Communacopia and Technology Conference on Tuesday, September 9th in San Francisco, and at the JP Morgan US All-Stars Conference on Tuesday, September 16th in London. Broadcom currently plans to report its earnings for the fourth quarter and fiscal year 2025 after close of market on Thursday, December 11th, 2025. A public webcast of Broadcom's earnings conference call will follow at 2 p.m. Pacific. That will conclude our earnings call today. Thank you all for joining. Cherie, you may end the call.
This concludes today's program. Thank you all for participating. You may now disconnect.
Well, everybody, looks like the earnings call just ended. So let's take one final look at the chart of AVGO. As you can see, yeah, it's moved up over that one-day max level thanks to the call. The call revived the stock pretty nicely, actually. And it's headed for a hit. Look at that. Bounced first off the one-day max, then went right up to that call resistance and rejected perfectly off of it. These gamma levels are pretty legit, you guys. But yeah, we've been live for like, 2 hours at this point, so we're probably going to call it there. But again, if you guys aren't already, like and subscribe so you can get alerted when we go live again. And yeah, go to TrendSpider.com to sign up for a trial for as low as $19 to test out the platform. And other than that, I will catch you guys in the next one. Later, y'all.